I asked ChatGPT what were the top tips and secrets from the most profitable traders, but don't give me those cookie cutter answers and those oversaturated answers that you can find all over the internet. Give me some unique responses of how they feel and what led to them their success. And I may not agree with all of them heading into it, but after reading some of them, it is really unique of how they all approach the markets. Let's go into number one here. You can see they manufacture their own edge daily, not just rely on static setups. If you've seen anything of my trading, I'm relying on one setup. Pretty cookie cutter. Yes, there's some other variables to it and discretion. So that's where I think I can agree with this, that I definitely use discretion. But it says most traders think an edge is fixed, like a golden setup they'll just wait for. Profitable traders know that their edge drifts in market conditions. I could definitely agree with that, especially of recently, with the markets being a lot more volatile, maybe sometimes more rangy as well. My edge isn't just statically going to work the same every single day. The conditions are different, they're faster, they're larger, all those different things, and I need to evolve with that. They tweak executions every morning. Different time frames, liquidity pockets, volatility adjustments. They're like chefs. They taste their dish as they cook it and adjust spices on the fly. I think that does pertain to recent price action, like I just said. My setup is not broken by any means, but a low a day view up break, let's say, is not necessarily running at a high clip rate that it used to. So I need to add other ingredients. I need to drift some different things and not just rely on a simple static setup to work 80% of the time. I need to be evolving with it. Number two, they slow down when they're winning and speed up when they're losing. Sounds backwards, right? But pros get more selective after a big win, knowing emotions are high and overconfidence kills. I could definitely agree with that. But it says, meanwhile, if they're slightly down, they aggressively hunt for high risk reward setups to punch back before the day spirals emotionally. Most traders do the opposite. They slam risk when it's hot, shrink when it's cold. I would think that's kind of how I would feel. Yeah, when I'm feeling hot, I want to size up. I know I don't always do it because, again, that could be very dangerous. If you're riding that overconfidence, you put on too much risk on that next trade because you're feeling good, and then you take a big loss. So I could agree with that. But then with shrink when it's cold, I would also think, yeah, I'm not really feeling too hot right now. I'm kind of in a slump. I'm not really finding these markets to be super clear to me. I don't want to over risk and over hammer it. So let me just size on down, be more picky, and shrink when I'm cold. So that's what I would have thought. And that's how I do think. But maybe they are saying they aggressively hunt for high-risk reward setups. That's not really in my trading style. So maybe that's how we're a little bit different there. Number three, they use inverse journaling to find hidden alpha. Don't know what that means, but let's say instead of journaling what worked, they tracked what they almost did but didn't. They missed trades, the ones they felt scared to take but were A+. The data exposes unconscious patterns and fears that cost more money than bad trades ever will. It's like unlocking a secret map of the money you left behind. So now I understand this a little bit better. You lost me on the alpha in the beginning, but I definitely do think this is definitely quite on the nose of it, of journaling with TradeZella. I always have a tab open that says, what was the best trade of the day? What was the money I left behind? Because I think, yes, it's good to track your winners, what's working really well that you want to maximize on in the future as well. But also, well, what did I not take? Where was the money that I didn't take, and why didn't I take it? Because was it a setup that I saw in real time and didn't take because I was fearful? I didn't think it was solid, but that seems to be really solid and winning at a high clip rate. I want to track those rather than just solely tracking, hey, here's all my winning trades. I almost want to be looking at, well, what are the trades I'm not maximizing on? What am I missing? Because that's where you're going to increase that P&L. So now we understand this number three a little bit better. I just got lost on the alpha there. But let's go to number four. They use risk bursts, temporary calculated over leverage on extremely rare plays. Not every trade, 1% risk robots. When a once in the quarter setup shows, they temporarily size up way bigger for that one shot. This is how you compress years of returns into a few days. The trick, only after real-time confirmation, not premeditated hope. So I think, yeah, this is maybe larger term trading, swing trading, that they're saying once every quarter, they're going to size up and try to make almost a quarter's worth of gain in just one day. Me being a scalper, there's not really one trade that can make up for a whole month of my trading. That'd be a rather large trade. But for the most part, I do understand the risk burst that, okay, well, I'm risking, let's say $1,000 per trade, but this one's really, really clean. It may not be the smartest play. It may not be the best for my P&L. We'll find out soon. But I want to put $1,500 or $2,000 on this because I really, really like it. But you can't be doing that every day or even every week because then you're really not being picky as it is. But I do definitely agree with every now and then, you get that urge, and sometimes it's a calculated risk to say, I'm going to size up on this because I really like it that much. Of course, it could bite me if it loses, but I'm seeing the risk here and I'm seeing the edge in it. I want to risk up just a little bit. Number 5, they engineer boring personal routines to offset trading intensity. The best traders are boring outside of trading. They stack low stimulus habits, same gym schedules, same meals, same wake up time. Why? Because trading is chaotic and they need personal monotony to stabilize their emotional baseline. No chaotic life plus chaotic trading equals no blown fuses. I could agree with the same scheduling of things. I go to the gym at the same time. I pretty much eat all the same meals. I wake up at the same time because the markets are very loud. I don't need it to be even louder off the desk. I want it to be boring. And I also want the trading to be boring, which I think we'll get to in a little bit here. But I think if you could just have a strict routine of this is when I chart, this is when the time on the desk, this is when I review, this is when I relax, this is when I go to the gym, then you could just really separate all your day and not just be trading all day every day, right? You could have boring slowness off the charts to decompress and relax and not just be wrapped up in all the intensity of the trading, right? Especially after a red day, it's even more important to just have a boring day after. Just get off the charts, forget about trading, just decompress and just not keep the rest of your day chaotic and stimulus as well, because we don't need that when we're off the desk. Number 6 here. They treat money like ammo, not trophies. Profitable traders don't celebrate a 5K win or more in a 5K loss. They review money like bullets in a gun, just tools to shoot their next high risk reward trade. They detach from the cash. Amateurs tie self-worth to account balance. Pros tie it to execution quality. I could definitely agree with the self-worth to balance. I mean, that's the whole thing about not being able to lose or handle losses, because you're just weighing your self-worth to that outcome of the trade, which is definitely not healthy. But the way they say they treat money like ammo, so, I made 5K. Well, it's really just I have more risk to play with, or I have more account balance to take on more risk, take more trades, and not threaten that drawdown. It's just tools to be able to play the game longer rather than, I made 5K, I'm done, I won the game. There's no finish line to trading, so it's really just it's giving you more ammunition to stay alive, take better trades in the future because you have that buffer, because you're in the green, things like that. So I do like that rather than just celebrating every 5K win as a trophy and every 5K loss as a bad thing. They're all just trades in themselves. Number 7, they accept that the best trades feel worst when entering. Okay, if you're looking for perfect comfort at entry, you're already behind. The stick to your stomach, uncertain, this feels wrong entries, those are often the highest paying trades because you're stepping in before the herd sees it. If you're only pulling the trigger when it feels safe, you're late. I really like the end part of that because it was saying I'm trying to get in before the herd sees it. That's pretty much just saying I want to get in before the amateur jumps in, because when it breaks for a new high a day, everybody can see it's bullish. Well, if everybody can see it's bullish, I don't want to be in now, because now most traders are going to lose. So if they're mostly jumping in now, it's probably going to be pulled back. Stop me out as well. I'm getting a bad price. So if I can get in before the herd even sees it, then I could sell my position and get out and let the amateurs jump in and probably lose. If you're only pulling the trigger when it feels safe, well, yeah, it's probably too obvious of a trade now that you're too late, right? Yes, we want to have a bias, but we almost need to get in the trade before it's super obvious and that it's already worked itself out and half the move or majority of the move already played out. And now we want to get in, you're late. Wait for the next move before the herd even sees that we're ready to move again. I really like the back half of that one. Pull the trigger when it feels it's safe, you're probably too late. Sorry, wait for the next move. Number 8, they know trading is 90% not trading. The majority of their day is doing nothing. They aren't active. They're watching like a sniper for their spot. Most of your energy should go to waiting, not working. Doing more usually just means forcing garbage trades. So the way they say the energy should just go to waiting, not working, I feel like a lot of time when we're just at the desk, I'm working, I'm here, I'm trading, I'm a trader, I'm working. Sometimes there's nothing to do. Even just watching but not clicking the buttons could just be a waste of time because you're just churning your wheels, tempting yourself to maybe take a trade. If you could just wait and not be active, maybe come back later, take a 30-minute break, 20-minute break, look at some other trading stuff on the back end, not live charts. Just wait and wait. That way you're not drained when it comes time to take that next trade, because usually you're probably going to force something that's pretty bad if you're just there and you're bored because you're active. Number 9, They weaponize boredom, kind of going back to the last point here, better than anyone. When markets slow down, most traders start clicking buttons out of pure boredom. The pros, they lean into boredom, recognizing that it's a competitive advantage because it keeps them fresh when the market finally moves. They treat boredom like a coiled spring. So, with that, it kind of goes to point 8 that we just went over, but recognizing that I'm pretty bored here, that I'm probably going to do something because, like I just said, we're at the desk, we're active, I'm a trader, I must click a button. Otherwise, what am I doing here? Well, not necessarily. You're just filling a void because you're bored. But there's no setup here. You shouldn't just be clicking buttons because you're bored. The advantage is to be fresh when your setup does present. I just made a couple of videos about it, of how choppy those first hour and a half of the New York session have been, that if you're bored during that time, you're probably just going to take a trades and drain yourself out during that choppiness. But let's say you come back at 1 o'clock, the trend is now visible and more so easily ready to take advantage of, but you're out of risk because you blew yourself out of boredom in the beginning. So if you could just be fresh when the markets do present your edge and your trade, almost like it was a coiled spring all that morning, now it's ready to move, you're fresh, you're flat on the day, you're ready to execute. Now you can take advantage of it, but everyone else that was just trading because they were bored, no matter what the chart was telling them, they can't participate in it because they got no more risk. The last one here, they purposely avoid trying to be the smartest trader in the room. Smart traders lose, disciplined idiots win. They resist the urge to outsmart the market. They build stupid, simple playbooks that they can execute without thinking under stress. They don't need to impress anyone, only to impress the scoreboard. Say that all the time. I've never worded it like that, but disciplined idiots are going to win over the smartest trader who just overtrades, takes anything, tries to be too smart for himself, tries to just make money out of everything. You're better off just being disciplined and not that advanced of a trader, but you can follow a simple setup, you can follow a strict rule, your same risk profile, all those good things, not trying to outsmart the market. Oh, I think it's ready to pop here just because, right? I think this could want to happen. If you could just build a simple playbook like I have as well, with the VWAP plays off these key levels, all I have to do is just execute it. I don't need to think about, is this going to win? Is this the best play? And I don't need to think under stress because I know this is my best play. I've marked it up thousands of times. It's rather simple. I don't need to impress anyone and try to call the bottom here or sell it at the top. I'm just trying to get in, snag a nice 1R out of it, not outsmart the market, just grab a piece of the pie. I know it's going to move longer without me, but I'm fine. I made my money today. So I believe all of these are pretty much spot on. Some of them are worded like you've maybe heard before. Some of them are definitely not. So hopefully this could help you not rewire your brain completely, but just set in some reality on what are the secret tips of some of the best traders. This is not my opinion. This was on, like I said, ChatGPT, not the cookie cutter answers you see on the internet. What are some tips that they feel are holding back a lot of traders and lead to the most success? And this is what we get here. And I like them. So hopefully you found value in this video. Hopefully you take some of them and implement them into your trading. And again, if you ever need me, feel free to reach out. What other videos would you like to see? Do you like this kind of style content? Or would you rather me be on the charts breaking down my own trades? Let me know down below. But I appreciate you guys. I'll see you guys on the charts tomorrow morning.